Trump versus Powell. All right, how do I see this playing out? Okay, and we're going to get into an interesting conspiracy theory about ending the Fed and all sorts of things like that in just a moment. But who told you guys several months ago we're going to have a big showdown between Trump and Powell? Told you guys that several months ago, and it's exactly what we're seeing now. The big showdown is here, right? And it's been like kind of moving in that direction, and I think today was like, whoo, it's serious now. When you look at the statements that Trump was saying about Powell here today, woo-wee, it's yeah, it is quite serious, right? Now, as this gentleman points out here from Finance a Lot, he says, for the record, Trump has absolutely no power to remove Jerome Powell. His term ends May 2026, which this individual believes will be the depths of a depression, which, you know, we're not going to get into all that. But the moral of the story is Trump can't technically remove Powell. Now, he could ask Powell to step down if he wants before his term ends. So if that's something Trump wants to do, he could do that. But in terms of firing Powell because, you know, Trump wants interest rates lower and Powell's not lowering interest rate, you can't do that. But he can also put a lot of pressure on Powell. And we have seen Powell kind of cave in the past. You know, Trump at the end of 2018 put a lot of pressure on Powell. And sure enough, Powell and the Fed, they started lowering in 2019. You know, and a lot of people thought that might not be the right move, but they did it. And so we'll see what happens here. But my guess is Trump can't remove him, and I doubt Trump will ask him to leave, but it's always a potential. I think in order for Trump to do that, the stock market would have to get really, really bad. Really, really bad. And the economy would have to get really, really bad, where Trump would feel like he has to essentially put the blame onto somebody, right? Because, you know, and I'm not a believer that the economy is going to tank or something like that, but if it did tank, it would be very clear. Trump's not going to assume responsibility for that. He'll blame it all on Jerome Powell and say it's all the Fed's fault why the economy tanked, essentially, right? It has nothing to do with tariffs or me or anything like that. It's Powell's fault, right? No, this is pretty interesting. Project 2025's reform or abolishment of the Federal Reserve. Isn't a coincidence. Jerome Powell's term ends May 2026. By creating a 1929 collapse, people will be so outraged with the Fed that it will no longer exist, bringing control under the Treasury. That's an interesting concept, right? And I could actually see that playing out if you actually got into a major recession. And once again, Trump's not going to take the blame for that. He would then blame it on the Federal Reserve. And he would say, this is all the Fed's fault. This is all Jerome Powell's fault. They got no clue what they're doing. They're the reason you lost your job. They're the reason everything's so bad right now, right? And so that would be a whole situation if that ended up playing out like that. And, you know, could I see them abolishing the Fed? Like I said, it would have to be a major, major recession or depression for that to happen. So I'd say it's a little out there, but hey, you know, some of these conspiracies sometimes do come true, right? Now, this is pretty fascinating. If everyone is selling U.S. Treasuries at fire sale prices, the U.S. will simply buy up all of its own debt with the skyrocketing dollar. You can't default on your own debt if you own most of it, thus resetting the cycle of U.S. debt being the most stable and valuable in the world. That's fascinating. Like, maybe pause the video right here and read through that again. Really, really interesting, right? Really, really interesting. So here's the steps. 1, credit downgrade, so nations dump U.S. Treasuries. 2, or trade war, so they start dumping U.S. Treasuries, right? Something like that. 2, rapidly raise rates. 3, oh man, if the Powell and the Fed start raising rates, oh my gosh. You want to talk about WW3 between Trump and Powell then and the Fed? Oh my gosh, that'd be insane. 3, restrict swap lines causing dollar shortage. 4, stage an incident, quote unquote. 5, dollar skyrockets. 6, panic spreads to financial system. 7, nations collapse, also 7. Print trillions of dollars to buy your debt for cheap. 8, the Great Reset. Ah, man, fascinating, right? So, I don't know. You know, just little fun conspiracies out there. You never know how this stuff's going to play out, right? But, yeah, I mean, the Fed being independent at the end of the day, I think is a better thing. With that being said, I actually agree with Trump in regards to, you know, Trump's sentiments. Also today, he was talking about, you know, he's always late, they're always late. Agreed. Yeah, I mean, that's pretty common knowledge, for anybody that does anything in regards to stock market economics. The Federal Reserve is very often late, very often. So, but it's also easy to play Monday morning quarterback, right? It's also easy to not be in the position of making that call and then saying, hey, you're late. Why didn't you see this recession coming? Why didn't you see this inflation coming? Whatever the situation is, right? So, hindsight's always 20/20, as they say, right? No. This also brings me to this subject, which I think is important because everybody's looking at gold. Gold hit another 52-week high. As I told you guys, what was that, 2 weeks ago or whatever, a week ago, 2 weeks ago, I did a video on one asset that just won't stop going up. And I said, basically it's free money every single day this thing goes up. And it's gold, right? It's literally like every single day it goes up. Now, eventually that trend's going to break. But for right now, it's every single day. So here's where it could be going on here, okay? You guys have probably noticed the 10-year has obviously spiked, even though the market went down a lot, right? So basically what could be going on, it's not for sure, but it could be going on. China could be dumping 10-year treasuries, right? Which then puts them into the dollar. And then they could be dumping out of the dollar and going into gold. So they could be dumping their dollars for gold. It's a potential. Because at the end of the day, it is very strange that gold just seems to go up every single day, right? Is it not? So, I don't know. You put the pieces together of the puzzle and it's like, that actually might kind of make a lot of sense here because gold just seems to go up every single day. It's absolutely insane, right? No, that brings us into Elizabeth Warren, right? And then we're going to get into what type of stocks are the best stocks to buy now and which ones will be better buys, let's call it 6 months from now, 12 months from now, okay? So in terms of Elizabeth Warren, she goes on CNBC today. She says the markets will crash if Trump can fire Fed's Powell. Okay. Do I think the market would crash if Trump fired Powell? No, the market would not crash. With that being said, I think the market would probably go down significantly short term because of the uncertainty that would bring. With that being said, then people would assume that whoever Trump's bringing in is just going to massively lower rates, which is actually bullish for the market, or at least the market looks at that as bullish, right? So, I think what she said there is a little bit more fear mongering. And I actually, I don't like it if I don't like when Trump's trying to get involved in trying to, fire this person from the Fed or trying to bring in a different person or threatening them and those sorts of things. I'm not a big fan of that. I would rather, the Fed be independent and the president doesn't really comment too much on what the Fed's up to or not up to, right? Because at the end of the day, all of these presidents are going to want interest rates lower for their whole term, more than likely, right? I mean, if they could get it their way, they'd probably want negative interest rates. I mean, so you get paid to take out debt. I mean, honestly, that's probably what these presidents would all want. And you could go back through a long list of them. With that being said, I don't love that Trump's taking that stance. But if he did, I don't think the market crashes. Like, S&P 500 goes down 30%. I just don't think that happens because, Trump fired Jerome Powell or something like that. Okay. No, that brings us into GVD. If you know my investing framework, I always preach to you guys GVD, right? As somebody who's been in the market 16 plus years, been through countless crashes in the market, countless major corrections in the market, countless small corrections in the market, and countless pullbacks in the market, and always makes it out to the other side and to live another day, right? GVD is so key in doing that. So building out a portfolio of growth stocks, value stocks, and dividend stocks. You don't want to just be adding one group because you're going to set yourself up for massive failure over time. Now, what are the best stocks to buy right now? Well, in order to understand that, you got to understand the type of market we've been in recently. We've been in a very shaky market, a market that's downtrended massively. Now we've started to come back here in the past week or so, right? We're off the lows, quite a bit from the NASDAQ, Russell, Dow, and the S&P 500. But whenever the market gets shaky, the best opportunities in the stock market, the type of stocks you want to buy, are growth stocks. Those are also the scariest stocks to buy when you've gone through a major correction or a crash. But that's where you get the best ROI. That's where the best risk-reward profiles are found. When you're in a major correction or a crash, you've got to be buying growth stocks. That does not mean you're going to time it perfectly. Sometimes you're going to buy into this great growth company that's going to probably go up 500% over the next 5 years. But between that 500% gain over the next 5 years, you might go down 20% on a short term. And you have to be okay with that. When you're buying a growth stock, it's because you're likely going to hopefully make hundreds of percent over the next few years or thousands of percent, right? So you have to be okay with buying that stock, seeing it and saying, this stock is a steal deal. I'm going to make 400% of my money over the next 4 years, but I might go down 30% on it over the next 4 weeks. And you have to be okay with that. If you can't be okay with that, you'll never hold it to make a 400% gain, because you won't even be in the right mentality in the first place, that you'll probably make 10% on that stock and then sell out. So in order to really be in the right mindset, you have to be just willing, when you're in a major correction or crash, that you might go down in short term, and that's okay. That's fine. You don't need the money tomorrow. And as long as you're right about that stock over the next 5 years, that's all that matters in the end. So if you go down 20 or 30% on a stock short term, it is what it is. Like whatever, right? As long as in a few years from now you say it says 200% gain, you did okay for yourself. Right? Now, so growth stocks are the best opportunities right now. With that being said, what stocks were the best opportunities 6 months ago, 4 months ago? Dividend stocks, value stocks. And if you look at what type of stocks if you look at a lot of stocks I was buying, certainly at the end of 2024, beginning of this year, a lot more toward value and dividend stocks. If you've been tracking my buys in the Patreon portfolio, a lot of dividend and value stocks, right? Because that was really the best opportunity I saw in the market at that particular time, given how high valuations were and how high a lot of growth stocks were. So I looked out there and I saw value stocks and dividend stocks. I said, that's an opportunity, right? And guess what? A lot of those value and dividend stocks haven't been hit as hard out there, right? And additionally, when you're in a tough market, you keep getting that dividend money, right? Just because the stock market's going down short term doesn't mean the dividend money stops inflowing. No. If you own Coca-Cola, that dividend's still coming in every 3 months, still coming in, right? And I have many dividend stocks across my portfolios that are constantly pouring me in money, which then I'm able to take that money and go invest it into that same stock or other stocks that I see opportunities in. And if we're in a major correction or crash in the market, guess where I'm taking that dividend money? I'm receiving all those dividends and likely putting in growth stocks at that particular time, right? So you got to understand the game and where the best opportunities are given a market. When valuations are very high, when the market's very risk on, you move more to value and dividend buys. When there's a lot of bearishness, like insane levels of bearishness, like we witnessed over the past 7 or 8 weeks, the highest levels of bearishness we've really ever seen in the history of the stock market based upon the AEI investor sentiment numbers, right? We've never seen that level of bearishness, incredible numbers. And so when you get there, you got to understand you better be buying growth stocks. That's your best opportunity. And, sometimes just 3 months later, you're already realizing, gosh, thank you for doing that. Sometimes just 3 years later. And you're like, gosh, thank goodness we did that, man. Thank goodness we did that. And so just got to understand where the best opportunities are and then build out a great overall portfolio. And how long does it take you to build a great portfolio? I would say probably about 3 years. If you are taking investing serious and you're building out a portfolio, month in and month out, I would say about 3 years and you could build yourself a great portfolio full of growth stocks, value stocks, and dividend stocks, right? And once you built it out, it doesn't mean you stop. You continue to build and build and build, right? I've been building portfolios for 16 plus years. It doesn't mean I stop, right? And I hope to build portfolios for another 16 years in the future, and another 16 years after that, right? And so you never really stop building your portfolios. It's just like from kind of the ground up. I think it takes you about 3 years to really build a great portfolio, because your first year, you're just adding your first positions and kind of starting to get some nibble on this stock, and you're starting to just slowly build, right? Year 2, you're taking new steps. Year 3, you're taking that next level of steps. And I think after that 3rd year, you should really be able to look at yourself going into the 4th year and be like, dang, you know what? Like, we've come a long way. Like, this is actually a legit portfolio now. Like, I'm like proud of this. Like, I'm proud I own 12 stocks. And these 12 companies are beasts. And I own some growth stocks. I own some value stocks. I own some dividend stocks. Maybe you have a speculative stock in there, right? And you can look at your portfolio and be like very proud of it. And so that's kind of how long the process takes, right?
Hey, it's Jeremy. I hope you really enjoyed that clip here today. Listen, there are 3 main areas a long-term investor has to understand. You have to understand financial statements, income statements, balance sheets, cash flows. You have to understand and master portfolio management. And you have to have the ability to project what is possible for companies in the coming years. Bearish scenarios, bullish scenarios. All these skills can be learned, and that's the good news. And I'm still just a regular guy who's out here. I just have a lot of passion for the market. I've learned a lot over the last 15 years. I had a tremendous amount of success, and I have a dedication to teaching people everything I have learned in the past 15 years. If I can do it, you can do it too. You can learn all that's required to become a great investor in my private group. The application is going to be down there in the description area. You can click on that, fill out an application, join us in the private group, get access to all my best course curriculums, teaching you everything that I got in my head. And you get ability to join our 6-figure, 7-figure Hall of Fame. We have such a tremendous Discord. It is incredible. So once again, description area down there. There's a link. You can apply to join my private group in there.
Alrighty, next one up here. The professor, Jeremy Siegel.
He has Wharton School of Business. He's also chief economist at Wisdom Tree. Jeremy, what do you think, just in terms of where we are headed this morning, how the world is reacting to the trade war that's kicked off primarily between the United States and China at this point?
Yes, good morning, Becky. Listen, I've looked at the data, and I do believe there are persuasive economic reasons for the Fed to aggressively lower interest rates right now. I know that Steve just a little while ago saying, show me some evidence, data that shows this. Well, one of the Fed's favorite indicators for long-term inflationary expectations is called the five-year forward rate of inflation. I know that sounds technical, but it really isn't a complicated issue. By looking at long-term inflation contracts, 10-year and 5-year, you can extract out the near term and look at those long-term. And these are market-based contracts. We know we're going to get a increase in inflation in the short term from the Trump tariffs. I call that the Trump bump. We're going to get that. But what we need to wonder about, is that getting into long-term inflationary expectations? That's exactly the topic that Jay Powell was worried about last week. Is that getting into it? The answer is definitively no. Actually, I've been looking at those long-term inflationary expectations, and they've actually been going down.
Yeah, and I think a strong argument can be made that the Fed should be lowering interest rates right now, Fed funds rate, that is. And the reason being is, you look at GSG. GSG is dead. GSG is a commodity index, right? That's going to give you a lot of signals about if you got major inflation coming. If you're wondering, if anybody's confused on why we had such crazy inflation in 2022, right? Supply chains are messed up. That's a big part of it. But the biggest part was commodity went through the biggest bull cycle you've ever seen in the history of commodities, back from basically about the summer of 2020 into the summer of 2022. Commodities went through a ridiculous bull cycle. And at the end of the day, what does everything come back to? It all comes back to commodities, right? The whole world runs on commodities. And so when you have commodities go through a ridiculous bull cycle, it's going to push up inflation in a massive, massive way. Then you tack on supply chains messed up because of Rona and all the other things, that's just going to help boost things up. But let's not fool ourselves. Commodities were out of control. Commodities are dead. It's down 3% in the past year, right? So you have no fear around that. CPI looks great. PPI doesn't look bad. So at the end of the day, especially with how much lower CPI is right now than the Fed funds rate is, we should be lowering. And so I do agree with Trump in terms of Powell should be lowering right now. And you can't say, well, Trump's doing these tariffs and that might, you could say a lot of things. We could just, is the Fed data dependent or are they opinion dependent? Seriously. Are they data dependent or opinion dependent? Because at the end of the day, they're supposed to be data dependent. That's what they always say. We're data dependent. We're going to look at the data. The data says lower interest rates. And so I agree with Trump on that. The Fed should be lowering interest rates. Right now, they should be getting ready to lower probably another 50 basis points here, right? And they should be getting ready to probably lower again this summer by another 50 basis points. And so that's what the data is showing. Your opinion might be different, these Trump tariffs are going to add to inflation numbers so we can't lower. That's opinion. And the Fed is not supposed to be opinion-based. They're supposed to be data-dependent. Data says lower interest rates. Your CPI is not just lower right now. It's been massively lower than where the Fed funds rate is. They should honestly lower Fed funds rate 200 basis points right now. They should. that would get you more in line with the Fed funds, similar to where CPI is right now.
A week ago on Wisdom Tree, you wrote, while the Fed has cover to ease, the mixed signals from the bond market complicate the picture. You said that with the yield curve no longer inverted, the case for Fed rate cuts weakens.
Well, you're right, and now it's just about flat. But this is before I looked at the case for these inflationary expectations. And right now, after the next 5 years, the long-term inflation expectations is 2.3%, and that's based on the consumer price index. And the Fed's favorite indicator is the personal consumption deflator index, the PCE index, and that's about 0.3% below that. So really, on the PCE, the long-term inflationary expectation that the Fed itself uses, that Chair Powell has talked about, they've used this for over 20 years, is now at 2%. So, on that standpoint, I think there's a lot of it. And by the way,
so forget about the bond market. It's a week later. We're feeling good about things, and we should go ahead.
Well, the bond market is, I think the bond market's being disturbed by a lot of things going on, and things about the independence of the Fed and all sorts of other situations. And in fact, I think the Dow would improve actually if Jay Powell actually lowered that rate. Another factor is that money and credit are just not growing fast enough. Over the last year, the M2 money supply has grown less than 4%. For a healthy economy, you need between 5 and 6% money growth. It's actually lower than it was 3 years ago. And the only way for the Fed to actually stimulate loan growth, to stimulate money growth back to a healthy level, is by lowering those interest rates.
So you're concerned about the Fed's independence, because I got 2 points from you. One was that there are good economic reasons for Powell to lower rates. The second is that the threats to Fed independence are real and growing. So you're worried about the Fed independence, but you think he should cut rates.
Yeah, and let me say that, listen, let's face the facts. If he doesn't cut rates and we have a recession because of the tariffs, who is Trump going to blame? Trump is going to blame Powell. And the Republican Congress is not all that friendly toward the Fed to begin with. Don't forget the whole
So you
Federal
basically
Reserve.
think he should cut rates to make sure he keeps the Fed independent. So listen to you, not Trump, but do this to make sure
I
that the Fed
actually think
independence
Fed
isn't threatened.
independence is enhanced, the probability, by him cutting rates right now.
You think inflation, Jeremy? You think inflation is
doing what he wants.
You believe those recent prints on inflation?
The recent prints on long-term inflationary expectations are down 30 basis points since Fed took office in January.
So the real risk
that is exactly.
The real risk is the economy. Not. I agree.
Absolutely,
with you on that.
the real risk right now is the economy.
Yeah, I've never, just looking at inflation for really the past 60, even 12 months, but specifically the last 6 months, have homes gotten cheaper or more expensive? Cheaper for sure. Not because of interest rates, but because of pricing. Like, there's no doubt I could buy a home cheaper today than I could 6 months ago, or certainly 12 months ago. At least in the markets I pay attention to, Phoenix, Arizona, Las Vegas. If I look at like cars, like it's never been cheaper to buy a Tesla. Like, oh my gosh, you can get a brand new Tesla on lease for so cheap, it's ridiculous. Like, shoot. Food store, not seeing major inflation, at least from what my wife tells me in regards to food store related stuff, right? Auto insurance has finally seemed to stop going up at the ridiculous clip it was like in 2023 and 2024. So that's starting to chill out now. So ultimately, like, just looking at like inflation, like it feels back to like normal times. Like, you're going to get some little bumps here and there in this thing or that thing, but it doesn't feel out of control or even remotely close to out of control at all now at this point in time, right? Very, very different than certainly a few years ago, right? So, yeah.
And those inflationary expectations into the long term that Powell said he's concerned about on the actual data is not present at the present.
Alrighty, folks, that's going to wrap it up for me in this video here today. If you're looking to follow me on X, that is going to be linked in the description area. I'll be covering Tesla earnings likely on the channel probably tonight, I would say. And then if you want my free checklist before you buy a stock, you can go ahead and click the pin comment down there, put in your name and your email if you want to receive it via email, or if you want to receive it via text, you can put in your number, and we'll send over that free stock picking checklist that should help you guys out tremendously. Much love and have a great day.